For decades, the US and Saudi Arabia shared a powerful alliance: oil for security. Saudi Arabia, with its vast oil reserves, supplied the US and the world, while America provided military protection in a volatile region. This arrangement, known as the petrodollar system, meant Saudi oil was sold exclusively in US dollars. As a result, countries worldwide needed US dollars to buy oil, cementing the dollar's status as the world's reserve currency. This gave the US immense economic leverage and global influence. Despite occasional disagreements, the core alliance endured, shaping international politics and the global economy for over half a century. For the US, it meant energy security and economic dominance. For Saudi Arabia, military protection and a stable market. But as the world changed, so did the dynamics of this crucial partnership. Recently, the BRICS group, Brazil, Russia, India, China, and South Africa, emerged as a powerful bloc, challenging Western dominance. For Saudi Arabia, joining BRICS offered a chance to diversify its alliances and reduce dependence on the US. With China and India as top oil buyers, BRICS membership promised stronger ties with key customers and a voice in shaping global economic rules. This move signaled a shift towards greater strategic autonomy for the kingdom. The world took notice, seeing Saudi interest in BRICS as a sign of a changing global order. In 2023, Saudi Arabia was formally invited to join BRICS, raising questions about its future direction. Western capitals, especially Washington, watched closely, aware that this could disrupt long-standing alliances. The kingdom's next move would have major implications for global politics. Would Saudi Arabia pivot east or maintain its historic Western ties? Within the BRICS alliance, a bold and transformative idea began to gain serious traction among member nations. The proposal? To start trading oil in currencies other than the US dollar, most notably, the Chinese yuan. This would mark a dramatic shift from the decades-old tradition of using the dollar as the world's default currency for oil transactions. For China, paying for oil in yuan isn't just about convenience. It's a strategic move to reduce its dependence on the dollar, shield itself from US financial sanctions, and elevate the yuan's status as a true global currency. For Saudi Arabia, the world's largest oil exporter, selling oil in yuan makes practical sense. After all, China is its biggest and fastest-growing customer, buying millions of barrels every day. Accepting yuan payments would not only deepen economic ties with China but also give Saudi Arabia more flexibility in managing its finances and investments, opening doors to new opportunities in Asia. Such a move would directly challenge the petrodollar system that has underpinned global finance for nearly half a century, potentially reducing worldwide demand for the US dollar and shaking up established power structures. If other major oil producers followed suit and accepted alternative currencies, the dollar's dominance, and with it, America's economic influence, could be seriously threatened for the first time in generations. The BRICS bloc began exploring new payment systems and financial infrastructure, aiming to bypass Western-controlled networks like SWIFT and create a more multipolar global economy. Saudi Arabia's public consideration of accepting yuan for oil sent a clear and unmistakable message. The global financial order was no longer set in stone, and new possibilities were on the table. Around the world, governments, investors, and ordinary citizens watched closely as the kingdom weighed its options, aware that any decision could have ripple effects across the global economy. The era of automatic American supremacy in global finance was no longer guaranteed, and a new chapter in the world's economic story was beginning to unfold. News of Saudi Arabia's BRICS ambitions and the possibility of oil sales in yuan sent shockwaves through global financial circles, deeply alarming US policymakers and investors alike. For decades, the petrodollar system has been a cornerstone of international finance, tightly linking the world's most traded commodity, oil, to the US dollar. This arrangement has underpinned America's economic strength, keeping borrowing costs low, fueling Wall Street, and giving the US unparalleled leverage over the global economy. The dollar's dominance has allowed the US to run deficits and project power far beyond its borders. If Saudi Arabia were to abandon the dollar in favor of other currencies, it could trigger a domino effect. Other major oil producers might follow suit, undermining the dollar's status as the world's primary reserve currency and shaking the foundations of global trade. The Trump administration responded forcefully, threatening massive tariffs and economic penalties on any country that dared to move away from the dollar for oil transactions. This was more than just economic policy, it was a warning. This aggressive stance underscored just how high the stakes were. America was determined not to surrender its privileged position without a fight, signaling to allies and rivals alike that the dollar's supremacy was a red line. Saudi Arabia now faced a profound dilemma. Should it pursue new partnerships and risk U.S. retaliation, or maintain its traditional alliance with Washington and the benefits that come with it? The kingdom had to carefully balance the appeal of joining BRICS and deepening ties with China against the very real risks of angering its key security partner, the United States, whose military presence remains vital to Saudi defense. Around the globe, governments, investors, and analysts watched closely as Saudi leaders weighed the potential benefits and dangers of making such a dramatic shift in economic policy. The future of the petrodollar, and with it, the balance of global economic power, now hung in the balance, with every move scrutinized by markets and policymakers. Whatever decision Saudi Arabia makes next will not only define its own place in a rapidly changing world, but could also reshape the very architecture of international finance for years to come. In May 2025, Saudi Arabia stunned the world by stepping back from BRICS, a move that sent shockwaves through global markets and diplomatic circles alike. Instead, the kingdom announced a massive new partnership with the United States, signaling a dramatic shift in its foreign policy priorities and alliances. The $600 billion deal, sealed during President Trump's high-profile visit to Riyadh, reaffirmed the historic U.S.-Saudi alliance, and marked one of the largest bilateral agreements in recent memory. This sweeping agreement went far beyond oil, encompassing defense, advanced technology, energy, mining, and even cultural exchanges designed to foster deeper ties between the two nations. For the United States, the move was a major victory, blunting the momentum of the global de-dollarization movement and reinforcing the dollar's central role in international trade. For Saudi Arabia, the deal promised not just security guarantees, but also unprecedented opportunities for economic development, technological advancement, and access to American expertise, benefits that BRICS simply couldn't match at the time. The kingdom made a calculated choice, prioritizing stability and a proven partnership with the U.S. over the uncertainties and risks of a rapidly shifting global order. The United States, in turn, secured its vital economic interests and reasserted its influence in the Middle East, a region critical to global energy and security. The world watched as the dollar remained the dominant currency in oil trade, at least for now, reinforcing America's financial power on the world stage. Saudi Arabia's decision sent a powerful signal to allies and rivals alike. The old alliance still mattered, and its impact would be felt for years to come. Yet, as the world's power centers continue to shift, the story of global influence and alliances is far from over. The next chapter is just beginning. While Saudi Arabia renewed its U.S. alliance, Qatar chose a different path. Qatar, a major gas exporter, embraced BRICS and continued building ties with both East and West. Its independent foreign policy allowed it to act as a mediator and maintain relationships with the U.S., China, and Russia. By staying with BRICS, Qatar strengthened its energy partnerships and explored trading in currencies like the Yuan. The country even conducted some gas sales in Yuan, signaling a willingness to experiment with de-dollarization. Qatar's approach highlighted the diversity of strategies among Gulf states. It showed that balancing old alliances with new partnerships could offer both security and economic opportunity. The Gulf's future would not be defined by a single path. Even after reaffirming its U.S. alliance, Saudi Arabia pursued new relationships with India and Russia. This emerging Russia-India-Saudi axis is built on shared economic interests, especially energy. Saudi-India trade has soared, with cooperation expanding into petrochemicals and renewables. India and Russia have deepened ties, especially after the Ukraine war, with India buying more Russian oil. Russia and Saudi Arabia coordinate oil production through OPEC+, stabilizing global prices. This trilateral partnership creates a powerful energy corridor and increases strategic autonomy. Global politics is now shaped by flexible, practical alliances, not rigid blocs. The world's energy future is being written by new, dynamic partnerships. The shifting alliances of Saudi Arabia, the US, BRICS, Qatar, India, and Russia reveal a world in transformation. The old order, US dominance and dollar supremacy, is giving way to a multipolar system. Countries are building webs of relationships, seeking flexibility and advantage. Saudi Arabia's journey, from BRICS flirtation to a renewed US deal, and new ties with India and Russia, shows the rise of multi-alignment. Qatar's balancing act and India's pragmatic partnerships highlight this trend. Nations are refusing to be trapped in binary conflicts, creating a more fluid global environment. The US dollar remains dominant, but challenges from other currencies and blocs are growing. The future will feature multiple centers of power and new rules for energy and trade. The story of Saudi oil is now a global story, one of adaptation, competition, and a new world in the making.